Hey, everybody. We are back with another Pure Perspectives episode. You got myself, Gary Pierce, and Willis Richardson with Pure Funding Mortgage. So, today, if you are in the market thinking about buying a new home, this is going to be your episode. So, we're going to have Willis walk through a handful of things you need to be thinking about when you're starting that process, searching for a new place, what you need to have in place on the lending side. And then you can start doing the fun stuff with your realtor, getting out shopping, looking at houses, and then ultimately getting a contract on a place. So,
Yeah.
Willis, why don't you walk us through kind of what you like to see folks, what they need to do in preparation of shopping for a new home and getting a loan?
Yeah. So a lot of people call and say, well, where do we start? The first place that you typically start, outside of just a couple preliminary questions that your lender might ask you, is with an application. We do have to look at your credit. We have to look at your credit score, and we have to look at how much debt you have. Now, when we're looking at debt, we're not looking at how much the balance is. We're looking at your monthly payment, your minimum monthly payment, and that affects drastically how much of a home you can buy. So one of the things that you can do if you have debts with larger monthly payments but a small loan balance, get those paid off in preparation for getting into a new house. Now, second thing we also have to talk about is how much money do you have to put down, right? So there's programs to where you can go as little as 0% down if you're a veteran, 1% down if you're doing a conventional loan, 3.5% down for FHA. Now, all of those are different programs that you have to qualify for. So we have to look at the application, see if you qualify for those programs, and then see how much money you need to save for your down payment. Neat thing, though, is you can get gifts from family members. So first-time home buyer, your parents want to help you out. Grandmother, aunt, uncle, third cousin, just has to be a family member giving you the gift. You can use that for your down payment.
Yeah. So let's so those are the few 3 or 4 things. So let's try to let's break down, let's talk, because credit is always everybody, folks either know exactly what their credit scores are or they don't. I don't feel like there's like this gray area.
No.
So if you're a consumer, talk about the credit and talk about the credit upgrade process. I know we do this, a few times a month. We figure out ways to kind of help folks improve their credit. Even if you're at a 700, going from a 700 to a 720 can impact the cost of your loan in a good way, in a meaningful way. So walk us through that a little bit.
Yeah. So when you're thinking about credit, think about rate buckets. So for every there's jumps in credit scores in your rate and how cheap that rate is versus having a different credit score. A big bar is 620. If your credit score is above 620, you're going to have cheaper rates and lower closing costs than somebody that has a rate below 620. Now, what you were talking about credit upgrade, if somebody's above 580, 590, 600, we're putting it into our credit upgrade program to see if we can get above that 620, because it changes debt to income ratios that you have to qualify for. It changes rates. It changes the cost of your closing costs. There's so much that happens at 620. So you definitely want to be above that if at all possible. We can definitely get you in if you're below that, but that's a really good benchmark for where you want to be. But just like you said, somebody could be at a 740. We get them to 760. That's the best rate bucket you can have. I hate to tell you, all those people that have 800 credit scores, you're in most loan types, you're going to have the same rate as somebody with a 760 credit score. But that's the top rate bucket, 760 and up. And you can see some real benefits to rate. So it's really good.
In regards to that as well, I think it's important. That's why it's so important to start the finance side sooner than later, because it can take a couple days. Sometimes we can get it done in a few days. Sometimes there's, some heavy lifting to be done. A lot of times there's things on your credit report you don't even know about. And so it just gives us some time to get you in the best position for your mortgage plan if you start earlier in the process. So if you're 90 days out, it doesn't hurt to start working on that part of the plan. So we got the credit. we're good to go there. You've got the application. Kind of walk us through what, that portion of getting pre-approved looks like for a consumer.
Yeah. So we need a couple documents from you. The big thing that we have to know from you as the borrower is your income. You do have to have income of some type. Now, you might be retired and it's retired income, but you still have to have income to show that you can pay off this loan.
Right.
Our biggest responsibility as your lender is to prove ability to repay.
Right.
So you have to have the ability to repay this loan that you're taking out.
Right.
So if you're working W-2 job, that means we need at least a month worth of pay stubs. Potentially, if you're getting bonus, commission, or overtime, we need your year-end pay stub from 2024 and 2023.
Right.
I always get people say, well, I gave you my W-2.
Yeah.
W-2 only gives me one number. It gives me your total of what you made.
Right.
Your year-end pay stub, though, breaks up how much overtime, how much commission, how much bonus, how much holiday pay, what your regular pay was. And so that's why we need that, so that we can see on average what you bring home for one of those variable line items.
Got it.
If you're self-employed, we need your tax returns. If you're retired, we need your Social Security disability or Social Security distribution letter. If you have disability, we need that letter.
Yep.
If you're a veteran and getting disability, we need that letter. Just whatever is your income documents, we need that kind of stuff. If you're getting an IRA distribution, we need to know what that is. And then we go in and we pull credit and we look at the debt that you have, the debt of the new home taxes and homeowners insurance, and then how that compares to your income. And that's what we call a debt to income ratio. It's the biggest ratio that we look at in getting you pre-approved. What's your debt to income ratio?
Right.
And so, like I said earlier, it's not all your debt, it's your minimum payment. So if you have a card that has $5,000 in credit card debt on it, but your minimum payment is $50 a month, it's only affecting you by $50 a month on what you're able to qualify for.
Good deal. Yeah. Okay. So now you've done all the analysis. At that point, are we ready to go shopping or for the most part?
Yeah. If we got you pre-approved and you've agreed that, I have that kind of money for a down payment and potential closing costs, then you get with your realtor, you say, hey, I'm looking at homes under 350,000. I'm looking at homes under $500,000. I'm looking at homes under 225, whatever your number is that we get you pre-approved up to. That way you're not wasting your time or the realtor's time, because you already know that you're pre-approved up to that amount. And as long as the home qualifies, you're going to walk away with that home.
Yeah.
So you don't want to be looking at $400,000 homes when you can only be qualified up to $225,000.
Right. So, and then also talk a little bit more about the taxes and insurance component and how that can vary.
Yeah. So especially here in North Texas, it varies by states, by regions. We have had a lot in the last 5 years. We've had a lot of hailstorms. We've had a lot of windstorms that have caused our premiums to go up substantially in North Texas. So historically, 5 years ago, if I was putting together a policy or putting together a pre-approval, I might assume your homeowner's insurance was $75 a month.
Right.
And sometimes I was high.
Yeah.
Now we're assuming $300 a month.
Yep.
And sometimes we're too low. And we do that because we want to, hopefully you'll shop that insurance around and get a lower insurance payment, but we want to stress your pre-approval so that you're not pre-approved for a $350,000 home. All of a sudden this home has a 15-year-old roof that the insurance policies are $500 a month.
Right.
And that puts you out of being pre-approved for that home. So we do try to do that. But some of the things, I'm not an insurance expert, but one of the big things in our area that's affecting homeowners insurance policies is the age of the roof. Newer roofs are going to be, you're going to get lower insurance premiums.
Right.
The other thing that happened in Texas a few years ago is the state legislature went in and they mandated that all the appraisal districts in Texas get within 90% of actual values. Before then, you might have a home that was worth $600,000 and you would sell it for $600,000, but on the property rolls, the county had it appraised at $325,000.
Yeah.
which kept our taxes down. We love that. But the state of Texas said, no, you need to be within 90% of actual values.
Yep.
And so in 2023, property taxes went up substantially, especially if it was investment property. If you were homestead, you had some protection in that. But if it was investment property, it went up substantially.
Okay.
And when you start buying a home, you might have a homestead exemption on your current home that has kept your property taxes lower on your $600,000 home, and you go and buy another $600,000 home. That bill could be $2,000-$3,000 a year more on property taxes than what you currently have.
Yeah, we're paying full freight at that point.
Yeah, so you're paying full freight. Now you'll be able to homestead that, and you'll be able to keep it.
Right.
You'll be able to protect it from increasing drastically over the next few years.
Yep.
But it is something that is going to affect your ability to purchase how much of a home you can purchase, because a home in Hood County, in Palo Pinto County, and in Parker County are going to have, for the same price point of home, are going to have three drastically different property tax values.
Right.
And so all of that kind of goes into looking at getting you pre-approved and understanding what that monthly payment is. It is hard to come out and get an exact dollar amount on what your monthly payment is going to be until you have found your specific home that you're looking at. Then we can get in the ballpark, because we can look up the taxes. Homeowners insurance is still going to have a swing on it, but we can look up the taxes and at least get that, your principal and interest payment, all knocked out for you. So you're much more honed in on what that payment will be.
Got it. Awesome. Yeah, I think that's when we're talking to folks, really just getting, it's as simple as it sounds with a mortgage plan, right? Like figuring out exactly where you stand, and that same goes for the, if you're doing a refinance, what does your plan look like? What are you trying to do with cash flow? We've got the home equity wealth report. If you're interested, we can get you one of those, get you signed up for that. And that's a tool, a great tool that gives you, current value of your property. You can add in your current mortgage payment. If you're thinking about in the future, you want to potentially keep that house and turn it into a rental property. It kind of gives you all kinds of different things to think about. And we've got a lot of folks that are really engaging in that tool a lot. And it just helps folks kind of look down the road a little bit. If they're, maybe they're not going to sell for a couple of years, but at least it gets them thinking a little bit more about, kind of what today's values are and what they can do, the flexibility they have. So anything else on that?
It's a great tool. I filled it out for myself, and every month I get one email. It's not overbearing or anything like that. It tells me what my home value is roughly. It tells me how much equity I have estimated. It goes in and tells me if I wanted to rent it for Airbnb and had a 50% occupancy, what I could expect annually in my returns. I'm like, Julia, we're moving. How'd that
conversation
go? It didn't go well. But I was looking at that, just floorboarded, just what they were saying that we could get. It's really cool information.
Absolutely. Well, if you have any questions about that, definitely reach out to us. Post in the comments below. We'd love to hear from you. Do us a favor. Make sure you hit that subscribe button. That way you can be alerted of any new Pure Perspective videos that are coming out. We're pushing out a lot of content this year, product spotlights, more perspectives from local business folks to kind of help folks understand what's going on in and around the community. So if you got any questions, definitely reach out to us. We'd love to hear from you.
Yeah. Love to.
Have a great one. Thank you.
Bye.